They were taking the leaf out of IBM's playbook. We are living in a very dynamic world, and this world is controlled by technology. If you want to order food, you want to order groceries, you want to order a house help, everything is available on your phone. That is the extent we are dependent on technology. That reflects in the kind of opportunity this sector provides. Look at the job scenario right now. What we know today is, out of all the job options we have right now in the industry or in all industries, technology is the most prominent one. And if you are already in the technology, right, probably you already know the name we are going to talk about. And if you are about to start the journey, you must know this name, because many of you are going to join or maybe considering this company as an alternate option or as a preferred option. Before I get into detail, here is my question to all of you. How many of you think that appreciation helps you do your job better? The same applies to me as well. So if you like the content, if you find these insights really useful, please show us some love. And I know you all know how you can do that. The company we are talking about is ATOS. ATOS is France's second largest company. I am hoping the first largest is Capgemini. And if you want to understand how big is the company has about 110,000 employees all over the world. Out of them, about 43,000 employees are based out of India, and they want to hire about 15-20,000 this fiscal year, which is 2022-23. About, I think, 3-4 months ago, their current CEO, who is leaving the company in 2-3 months, he was visiting India. So India, what he promised was, India is at the heart of their all the services. So without India, they cannot really make a big move. If you go little back in the history, what you would realize is ATOS was named ATOS for the first time in 2000, and it has gone through different mergers and acquisitions even before that. So we will not spend much time on that. What's interesting is that it houses lot of companies which they have highlighted on the right here. The biggest of them could be the Sintel story. And in 2020 or maybe 2021, they also tried to acquire DXC. Okay, they failed in that bid, but they were trying very hard for that. So these were their big investments of late. That's not it. This company has been deemed as strategic by French government for its high-tech assets, such as manufacturer of supercomputers and softwares used by the army, the government, the Ministry of Finance, all of them. And not just that, former PM sits in the board of this company. So that means it has close links to the French government. That's why it becomes very important. And whenever something goes wrong with this company, somehow French government steps in. So what's happening at ATOS right now? Why we are talking about ATOS and we are saying the fall of ATOS as a group? To understand that, let's go in and see the stock market performance of ATOS for past 5 years. Here I have this chart, and this is clearly reflecting ATOS's poor performance over past 5 years. The company's stock value has gone down by about 85%, while for comparison, if you look at the other peers, the stock market has grown by stock market performance is about a 142% growth at the same period of time. Not just that, we have been hearing bad news from ATOS time and again. Recently we saw the current CEO has decided to leave the company. There has been big tussle between the board and the CEO. So what board wanted to do and why CEO was not in favor of that. Board had the pressure. What board was proposing, so board was proposing to separate two key units, which is cyber security as well as big data unit, from ATOS and create another separate entity. So they were taking the leaf out of IBM's playbook. What IBM did recently was they did a spin-off and they launched another entity as Kyndryl, where they packaged all their legacy services and put them into one bucket, while they also grouped some of their key initiatives going forward in the separate entity. The idea is that instead of getting dragged by the legacy business, they should focus on some key technology areas which can really translate into big gains for company and its investors. So the same playbook is being adopted by the company's board, and the CEO was not in favor, and because of that the CEO has resigned. The CFO also has resigned from the company. So in next few months they both will be going out and the new management will come and take over. That is the crisis. So at the heart of all this, it is a crisis about leadership, and this crisis has not started in last 6 months or now. This has been going on for some time now. In fact, if I recall, somewhere I was reading in 2008 also they were facing similar crisis. If we go and look at the stock market performance of 2008-9, you see from 2000 high the company was struggling till this time, somewhere around this time. So in a way the stock has been really a poor performer for its investors. That means the huge amount of money these people have put in and the faith they have poured into this management or any management before this one has miserably failed the expectation. To understand the pain point little bit more, let's deep dive into some of the data points, and we need to go back to 2019 period. In 2019 they reported a revenue of about 11.5 billion euros. In dollar terms that's over 12 billion euros, and it was a growth, a marginal growth, which you can see over here quarter on quarter and also yearly. The operating margin they have not reported in percentage terms, but it is whatever it is, you can see. I don't have the precise comparison, so I would not go into that at the moment. Because what the point I'm trying to drive is little different. They had free cash flow. If you look at the normalized diluted earning per share, that was about 7 euros per share. Fast forward 2021, if you look at their revenues have come down to about 10 billion euros, which is, look at this, 2.5% down in constant currency terms, and the operating margin is about 383 million, which was about 100 what was that, what about 1200 million euros. Now what's important is their cash flow situation is also deteriorating over last 3 years. Look at their earning per share, which has gone down to into minus. Okay, and when you are reporting that kind of number, the board and the investors are not going to sit silently and wait. So when you look at that, it's completely bad picture. Current CEO joined the company in 2022 and now leaving the company within just 6 months. Can you believe that? At this level the company is struggling to convince their own CEO about their future plans, and that is causing a huge pain in the stock market performance again. And we saw the company lost its lot of value in just last few days. So from euros 26 the stock is now 13, again wiping about 25-30% performance within just last 5 days. That is the pain company is having right now. What's the impact of all this? You saw all of them, management, board divide, and then you saw the CEO resigning, CFO resigning, then you also saw the revenue trend coming down. There is no employee growth, headcount growth, I mean. What that means is, even if you join the company at a premium at this point of time, because probably they have plans to hire 15-20,000 people this year, specifically in India, would they actually have a great future? Can they promise them great growth? I suspect that, because the company which is not growing and has lot of divides to handle first, they cannot look at the employee side as their first priority. So if I were to make a decision, I would give this company a miss for the time being. This has not been a very good story to be part of. So if you are one, I would say excuse yourself from this mess at the moment.